All right, everybody, welcome back to Matt Money. Today, I want to talk about silver, and we're fortunate to have Steve Cope, the CEO of Silver VIPR Minerals Group, to discuss the current silver environment with us today. If you guys are ever interested in looking at Silver VIPR Minerals, feel free to check them out at the OTC markets at VIPRF or on the TSX at VIPR. Steve has approximately 12 years of experience in the mining sector, has worked a multitude of different roles, including financing companies, project evaluation, investor relations, mergers and acquisitions. Steve, that's a lot, but feel free to add anything that I have missed, because I'm sure I have.
I don't know, 12 might even be old now. It's probably more years than that. But that's okay. I've been around, I've grown up in the industry. So whether it's 12 or 15 or 20, I don't know. I've grown up with it. My father's been, was a stockbroker and then started taking over companies. So I've got an uncle who's a geologist and certainly been every which way I can all the way growing up. I've been helping out with the companies, going to trade shows. When I finally finished university, I jumped full bore and jumped right in. So I've been around, whether it's 12 full time or 13 or 14 or whatever the number is now. I've been around for a bit.
It sounds exciting, man. Yeah, it sounds really exciting. It sounds like I wish I got a little bit more exposure to the market when I was growing up. So it's cool that you were able to kind of see that growing up.
Well, I've honestly, I felt like a unicorn for a long time, because there's a generation from my age group that has been completely missing in this sector for a very long time. There's some more younger CEOs not popping up now finally, which is nice to see, because I felt very alone for a very long time in this sector, being a younger guy who was interested in gold and silver, and obviously the reasons why, because I grew up around it. But yeah, it's nice to see a lot more interest in faces looking at precious metals again.
Yeah, absolutely. So I want to take a step back and provide the audience with a little bit of context of the macroeconomic environment of silver right now. So spot is currently down approximately 25% over the past year, currently sitting at just under $19 an ounce. There were some recent spikes, as you're well aware, 2020 and 2021, where it jumped up to about 28 bucks per ounce. Actually, probably jumped even higher than that with certain intraday peaks. But what is your interpretation of the recent price? Do you think it's undervalued, overvalued? The retracement of silver price, and how do you see it kind of faring going forward?
Well, I wouldn't be doing my job if I said it was overvalued. These prices, it would be hard to be working in the sector. I mean, even at 30 or 28.30, where you said it peaked out in those, it's still, it was, the companies were making money then, the producers. But for a long time, even if you go back to, 2012 to 09, like that kind of stretch there where you had a good run, the average cost for the silver producers then was, I think, average $20 an ounce all in, when you're really digging in and seeing the all in cost. So again, you need those higher prices. And obviously since then, and I think it's going to be a question and topic that'll come up, but the magic word of the day is inflation. And those costs have done nothing but really increase on an all in level. You'll see mining companies say, they're all in sustaining costs, which is a better number than the cash cost number, which used to be, kind of a joke, frankly, in our space. So I think it's undervalued. There's obviously a lot that goes into that price, and the big thing that investors need to realize is the disconnect between that paper market price versus the physical price. And if you're trying to buy physical ounces, and I'm sure a lot of people watching the show are very interested in, physical and buying and stacking, and there's been a lot of attention drawn to that the last couple of years, and most of them, unless they've got a really good source that I'm not aware of, are paying a premium to the spot price to try and accumulate, and a lot of times very large premiums, to accumulate the physical metal, where you've got that disconnect between the paper and the physical, and banks did that to create a much larger market and control those prices. And so yes, we're deflated now, but again, I think we are going to spike up, and given the other macroeconomic things happening in the world, it's kind of a ticking time bomb before it explodes and goes a lot higher.
Right. And I think one of the things that I'm kind of curious about, you did mention a little bit of inflation. Did you mean specifically just global economy inflation, or did you mean specifically the mining industry inflation as well, with the recent spikes you've seen in gold prices?
No, I mean, when we're talking about costs for the miners, we're just talking, fuel for those miners being a massive one, and the inflation that we've seen there across the board, certainly in the Western world, of what gas prices are doing. If we're talking to your US guy, I'm based in Vancouver, and we've forever been the highest gas prices in North America here in British Columbia, and specifically in the lower mainland of Vancouver, we'd be paying close to $10 a gallon right now up here.
Wow.
So we've always been envious of the gas prices in the US, even with your numbers going up. So
For sure.
But that hurts. Like the miners, a lot of them they need that fuel. Obviously, you're across the board, whether it's stuff if you're not on the electric grid, but you're powering your earth movers and your diggers and everything else. Fuel is a big part of the cost for the miners. And then your staff is feeling those burns, and they want salary raises to try and make up, with inflation. So your costs steadily are always going up. I mean, my dad will tell stories when he was younger in the industry, and at $200 and $300 gold, or lower with silver, what people valued an ounce of gold at. And then he always laughs and says, okay, they were valuing an ounce of gold in the ground at $50. And then you talk to a lot of investors today, with even when gold is at 2,000, and they still want to value an ounce of gold in the ground at $50, and it doesn't make a lot of sense.
Right.
Which again, I mean, we can argue over what an ounce would be valued at, but investors haven't changed in 30 years what they want to value an ounce of gold at. So,
right.
But it's interesting, but inflation is definitely affecting the industry. But like it is everywhere, and it's affecting all sectors, and that's the pressure, and why we're talking about a deflated metals price is because we've got these rapid fire interest rate hikes in an inflationary market, and everyone is racing to US dollars. They want to sell every paper asset they have, whether it's in mining, whether it's in, the blue chip stocks, the Teslas, the Apples, whatever, cryptos, it doesn't matter. People are racing and panicking like we saw in 2020, in March of 2020. And we all saw what the rebounds were after those panic periods, and gold and silver stocks tended to be the first to rebound. And they, within a couple of months, we were hitting all-time highs. So is this a 2008? Well, 2009 was a pretty spectacular year in the mining industry. So when you get these, kind of rapid sell-offs and panic, the rebounds tend to be pretty good. So I think it's a pretty good time for people to be contrarian and start putting money into the space. Put more into the space.
Yeah, and I think one of the things that I'm definitely seeing is the large demand for physical silver, kind of like you mentioned, not only for stacking, but also the EV and renewable space, going into solar panels and stuff alike, which I think is really truly just in its infancy, specifically on the EV side, where less than 5% of new vehicles sold are EVs in the United States. Rather, I know in other countries it's a little bit different, but that's going to change over the next 8 years or so, where I think a lot of people are anticipating close to 50. Is it going to be 50%? Who knows? But close to 50% of new cars going to be, EV vehicles rather than internal combustion. So I don't know if you have any thoughts about that and the demand going forward for silver based off of that.
I have a lot of thoughts. I mean, obviously, we've seen the governments and certainly, around the world changing and saying, we're going to have, and some of the car companies are, obviously adapting and saying there won't be a car in our fleet that's combustion by, a certain year, whether that's 2030 or later, whatever the year is. What people, I think and people are starting to understand it, but the big issue with all that is that's fine and dandy, just the car side of that. But then you have the infrastructure side of that. If like even here, we have a much smaller population in British Columbia and Canada, we just finally are getting one massive hydroelectric dam online. And they say if the whole province went to electric cars, we would need 5 or 6 of those dams to open. And it's already taken 10 years plus to get to where we are with this one dam.
Wow.
And so you don't have the infrastructure to support the charging of those electric vehicles. Solar helps, and that's something else that can come in. And then like you say, all the silver. Well, we're already operating at a deficit every year on silver production versus what's being used. So what are we going to do? Like you said, if you're at 5% right now, what happens when that goes to 10, 20, 50, as the programs the government wants to do? You're going to need massive amounts, and you don't just use silver in the, in the car or in the electric components. You're using it, like you say, in solar, you're using it in the infrastructure. You're using, and then you get into the other, metals like copper, and then, cobalt, zinc, as far as the batteries are concerned in those cars. And you need just a massive amount of these metals that you don't have. And it takes a long time to get mines up and running and into production. So you're going to be operating at a deficit more aggressively for years to come. And again, that obviously bodes very well for the price of silver. But there's also that silver's in that weird spot, because silver was always considered, tied to gold. It was, like you say, more of the stacking side and that. And to me, it's being kind of rapid fire transition into being an industrial metal. And forever people said, yeah, there was always this industrial side, but it doesn't really affect the price.
Yeah,
And
I definitely have seen it's decoupled pretty dramatically over the last few years.
like, because the general rule used to be, okay, gold goes up, silver outperforms gold on the way up. When gold goes down, silver definitely goes down a lot harder and faster. And we're still seeing that side of it. But that's if you're tying it to the same investment instruments, where they're not anymore. Because silver, to me, should be more on the copper side, or it's transitioning more to that side, or it's some hybrid in between that should be, going up based on both worlds. So it's definitely long overdue. However long it takes, is it another year? It's going to break out, and it's going to break out in a very aggressive way. We've seen silver twice at $50 an ounce, in our history. I think this go around, you're going to see it much higher than that. The first, you can say the one in the 1980s, that was a bit more manipulated, fine. Like that was kind of a huge jump up with the Hunt brothers, but the last run up to being 50 with inflation and I think you're going to see it much higher than 50 when we peak out at, whatever silver is going to end up peaking out at in this cycle. And again, gold already touched 2000, but I think gold's going to be much higher too. So
yeah, just when I look at it, I'm not saying that gold is super overvalued or anything when I state this, but just looking comparatively between gold and silver, in my, opinion of what I know and what it's used for, just seems so undervalued here. It just is, it's pretty astonishing. I know a lot of people that stack, and where their cost basis is over the past 20 so years since they've been stacking. And I'm just like, the use case for silver as an industrial metal, like you've said, is greater than ever, and it's going to continue to be in demand. I just don't understand why it hasn't, I guess, spiked in price as of yet.
And the only thing I can come up with on that is, like I say, the disconnect between the paper market and the physical market, and the fact that, when the banks created the ETFs to kind of take what is a very small, like in gold and silver, it's a very, very small market, and they want to inflate those markets, but in doing so, they control it. And when you can lend out a paper, create paper that's lent out, with 100 or 1,000 or whatever the number is at, depending who you talk to, but the amount of paper lent out that's supposed to, if you turn it in, I can get delivered an ounce of silver or an ounce of gold, and that doesn't exist. And then people want to do it, and they say, well, there's too many people want that, we're going to have to pay in currency because they don't have those ounces that they promised behind the investment tool. So that is what controls the price, unfortunately, right now, anyways, until we get, some shock to the system, whether that's a currency that's, at least partially backed by precious metals again, or the US dollar no longer being the world currency at some point, potentially. Something is going to happen and change, and it's going to break the system because the system it works right now isn't favorable for gold and silver investors. So, But that being said, there still runs up, and those banks know how to make money. And, supposedly the JP Morgans of the world are obviously supposed to be the largest holders of silver, yet they, short against it with their other products, but they'll position themselves and they'll allow a run, and, people will make a ton of money. The bull runs in our sector, typically go for 8 to 10 years. And when they go, the level of wealth that's created in those time periods is huge.
Several 100% most of the time. So at least when I look at
the beginning, if you start from the beginning to the end, like you're talking about, thousands of percent the run up from the bottom to the top. Yeah.
Right.
It's hard to time it. We all can predict it in the day, but
which is why whenever I get in a conversation with you, it's like, what do you think of? It's like, well, if I could tell you what the price is, I probably wouldn't be here. But anyway, I do want to transition over to Silver VIPR Minerals Group and positioning themselves as La Virginia Gold and Silver Project in Sonoma, Mexico, which is a huge province that I think it's the largest gold and silver producer in Mexico. You can correct me if I'm wrong there.
Largest gold.
Yeah. Is it largest gold and silver?
Largest gold producing state, and I think it comes in around number 3 in silver.
Okay. So by the time he took over La Virginia several years ago, they had already drilled 200 boreholes and had drilled over 50,000 meters. And since then, you've drilled over 100 since you guys have taken over, an additional 27,000 meters. I've seen some of the drilling results are rather impressive for the Rubi discovery that you guys have. What can you tell us about what you're finding and delineating at the La Virginia project?
Yeah, I mean, it was a project that, had a history. It had a history, again, kind of entering into actually a period like we're in now, in that, the mine finders was the operator on the project. They went looking for another Dolores, which was their flagship operation, which is still a mine in production 100 kilometers to the south, just across the border into Chihuahua. And then they sold their company for 1.5 billion to Pan American Silver, mainly for the Dolores mine. And with it came, La Virginia, which had become their #1 exploration asset. And Pan American, but then metals prices plummeted. We came off from that previous high at 50, and when it was bought, I think silver was probably around $40 an ounce. And Pan American, at the best of times, doesn't do a lot of grassroots exploration. So the project got put on the shelf, but they liked it. There was no resource or anything done on it. And they ended up, the option that mine finders had created on the internal claims of the project where all the work had been done, they let go because they didn't want to make the large payments that were owed to the group they had optioned it from. That group approached us in 2018 and said, look, you guys have worked with Pan American lots of times. You have a good relationship. They won't even pick up the phone for us. We know there's lots of good stuff. Actually, of the 188 holes that have been drilled, only 50 have been made public. Pan American kind of buried the rest of the results and didn't put them out because they wanted to sit on it. Their logic was probably that group would walk away and they would just go back and stake it for free. But we got involved. We went and looked at it, and our expertise is in exploration. And they drilled the Com Virginia Las Guatas area where you mentioned they've done 50,000+ meters of drilling pretty aggressively. But we looked at this large land package and saw the same structures that run through that zone. They outcrop as these massive silicified dikes, and they run for up to 100 Ks, where you keep seeing this trend running north-south through the project. And then we looked at the database, and they hadn't even mapped or sampled most of the projects. So we said right away, there's a good chance we're going to get involved and make new discoveries. And our #1 exploration target was El Rubi, which we saw right off the bat, and made a discovery, and then have grown and now come up with a maiden resource on the project. But it's just a start. We've got El Rubi. It's still open along strike. Since that resource, we've expanded it at least 300 meters to the south. And we just recently completed a geophysics program that's really opened our eyes to the potential of, what that can be at depth, as well as a bunch of new targets that were blind targets that have lit up in the geophysics to the east of El Rubi.
Interesting. So that's cool to kind of hear, because at least when I was initially kind of going through the presentation, just blind eyes, all I kind of was attracted to was the El Rubi. So to hear that there's additional potential below El Rubi as well as to the east, which I know is put into the presentation as well. I'll have to dig back through it and kind of do a little bit more diving. So that's interesting to hear. So as you alluded to, your team specializes in exploration and discovery. You've now discovered and have line of sight to about 49 million ounces of silver equivalent, as you mentioned, throughout the acreage in El Rubi and some of La Virginia. How much additional work do you guys think you guys need to do at Silver VIPR Minerals to either get started on a PEA, or are you kind of still delineating the rest of the acreage that you guys kind of have before you kind of go down that PEA path?
It's always an interesting decision in the timing on a PEA, because it's, you don't want to do it too early. If you can continue to grow and build size, then you want to hold off. You want to wait before. I could see us doing it after the next resource, certainly up on the high. Our resource was focused around the idea of open pit heap leach mining on El Rubi to start. But then we always knew that we were going to want to develop an underground resource there as well. I mean, the main structure is a vertical structure. In our andesite package where the resource is located, it is a very favorable horizon for mineralization. Once we hit the rhyolites, we still follow that structure into the rhyolites, but it's much tighter, compact. It didn't allow for those really nice widths and grades that we see. And so that deeper target that I mentioned will be the contact between that rhyolite package and the next package below it, which will either be back into andesites, or it'll be into like a metasediment package, like where you're going to see your carbonate mineralization, and base metals will really kick up with precious metals. So we actually had Crescat Capital did a large investment in us 2 placements ago, and Quentin Hennig did a deep dive, who evaluates all their projects, and a pretty famous geologist. If you don't know who he is, I'm sure a lot of people recognize the name. But he looked at it and said, you're onto a high-grade gold carbonate base metal system. And when you look at our results, he said, well, there's no base metals. We're not in carbonates. What are you talking about? Mm-hmm. And that comes from that lower contact, and similar deposits around the world, which are multi-million ounce gold silver deposits. It's at that contact where they really hit the bonanza grades and widths. And so we're going to, we did the geophysics. We see a very large target that we're, just call our deep target at El Rubi that, we are fairly confident that that could be that, type of, position in the feeding for what we're seeing high up in the system at El Rubi. What we have got in the odd half-meter sample, we see these sulfides that are blasted from deep in the system, and our geologists say they didn't mineralize, they've been forced up when, millions and millions of years ago when this stuff was being formed, and they've come from something deep. So we've always known there was going to be something down there deep. Hopefully, our next drill program that's going to be target number 1 in testing, and fingers crossed that we could be onto something pretty spectacular with that.
So how are you going to do a lot more drilling throughout the rest of 2022, 2023 to help find out more about that deep target, or is that kind of down the road?
Well, we want when the market right now, we need to be smart in this market. We can't rush off and start doing a bunch of deep drilling. It's, this market, like you said, it takes a contrarian investor to look at where this market is right now, and drilling, you can burn through a lot of crash very quickly. So right now we are doing a lot of additional mapping and sampling work to make sure we're 100% ready when this market turns to go back and really start drilling. And, in a normal market, we'd be adding rigs right now and expanding on our program. We'd like to have 3 or 4 rigs turning right now, because we've got a bunch of blind targets. We've got targets that we already knew about that we put a couple holes into, but again, with the geophysics, it really lit up a lot of stuff. So we want to add rigs and build on that program and get 3 or 4 rigs going, but it doesn't make sense with where we're at right now in this market and share price wise to be raising a ton of capital to go out and do that program. So over the summer, I think we're going to do a lot of mapping and sampling. If the market turns, we're ready to go. We can start drilling immediately. And we've got the drilling company still has the rig on site actually waiting for us, the one that we have been using. So it's a tough market right now. We've got, well, we got 49 million ounces as a start. We've already added to that with 300 meters of strike at El Rubi. The geophysics shows us what we thought was happening north of Rubi, so we still have the rest of that plateau to continue to expand. And when you actually get to the northern end of that plateau, which is 2 kilometers by 2 kilometers, we have El Rubi North that, again, sampling is hitting gold and silver. So it's got lots of room. And then further north, you got La Gloria, which is a whole other beast in itself that we're not going to race to test anytime soon, but that's a large porphyry target in the same system. So there's lots to be explored. I think we're going to take it easy this summer and just get caught up. We've been drilling straight since, kind of 2018, and get caught up on a lot of other parts of stuff that we need to do, and just be ready to go when this market turns to start, get aggressively after it and drill very, very deep and very hard on this target.
No, that's good. That's good insights, and probably prudent as well. And I don't know if you wanted to give a plug for the group that you're in. I know that you're kind of ahead of 3 different companies, and a lot of your team is part of the other 2 companies that you're kind of working with as well, where you guys are specializing in the exploration and discovery of a lot of resources, and kind of then once you kind of delineate them and kind of get them to a place, packaging them up and selling them. So I don't know if you wanted to plug that in.
Yeah, I think it's important, and I think it's something that separates our group from a lot of the others. And the group is called the Belcara Management Group, which is the private management group. We created it after the sale of our last kind of company, just to have a name that would market from company to company that would outlast when we do sell them. And also, we learned a lesson when we sold that last company, Norco Silver, was that there are a lot of non-core assets that don't add value to that you lose when you're just sitting in a single company with so we lost our trucks, we lost the house that was our office in Durango, Mexico, a lot of our equipment that didn't add value to the deal when Coeur ultimately bought us out in the bidding war between them and First Majestic. But so we created Belcara for the marketing purposes, but also as just a vehicle to own some of those non-core assets that we can then, they get, leased to the individual companies at no cost just to use, depending where they are in the world. But we've got 3 public companies under our management right now. There are other groups that have similar, where they have multiple companies within the group, but I think our group, more than any of those, we kind of, everyone within the group has eyes on all the projects and all the companies within the group and help out. So the other one is Barcelli Minerals, which has a gold project in northern Sweden that's got 2.5 million ounces right now in gold. And then we've got Orex Minerals, it's in Durango, Mexico, and has a few projects, and it's just actually about to start a drill program and with their joint venture with Pan American Silver. So definitely things to keep an eye on. like everyone else in the world, I think they're all heavily undervalued right now with this equity sell-off that we've seen. And we really see that, I think, you get hit harder by it in the junior space, because a lot of these companies are, they're not the most liquid stocks, especially compared to some of the blue chip ones in the world. So when you get a sell-off and pressure on them, they can fall off very aggressively. But at the same token, when things turn and they start going up, they go up very fast.
Yep.
Like I look at March 2020, and I think Silver VIPR can maybe, I don't remember what our low was then, but say we got down to 20 cents or something in that neighborhood, probably close to where we are now. And within a couple of months, we were hitting, all-time highs. So it's just one of those things. This market definitely does this, but then it also rebounds very quickly. So again, most people are, looking at the world and they're struggling, but if you can be contrarian capital on your pocket, I think, this is a good time to be deploying it into, companies like ours.
Yep. Well, Steve, I do appreciate the education that you provided about, some of the silver macroeconomic environment and some of the places where you're kind of thinking that the market is heading, as well as obviously introducing us to Silver VIPR minerals. Sorry. Is there anything else you wanted to highlight for the audience before we sign off?
No, I think it's a good intro. Please don't hesitate to reach out. You can get all of our contact details at www.silverviperminerals.com or email at info@silverviperminerals.com. We're more than happy to answer any questions or talk about the silver space. That's our job, and we're not, we love talking and communicating with people. So please don't be shy. I know some retail investors are scared to pick up the phone and reach out and talk to upper management at times, but we promise that, it's worth your time to do that due diligence and reach out and get to know us.
Very good. Well, I'll stop it there, and yeah, much appreciated, and hopefully have you on in the future.
Sounds good. It was a pleasure.